What's up, everyone? All right, so today I have a really exciting class for you. This is lesson 1 of our Intro to Cryptocurrency Trading course, which is part of our Warrior Pro Trading course for all of our students. Now, I have Arsh joining me here today. He is a member of the Warrior Trading community. He's also a active trader. He trades cryptocurrency, he trades options, he trades stocks. And he's going to be presenting this class to all of you guys with me today. So welcome, Arsh.
Thanks for having me on, Ross. It's really great to be here presenting this cryptocurrency trading course with you, and it's something that our students have been extremely interested in learning about. So there's some extremely important information included in these lessons, and we'll teach you everything you guys need to know to get started with trading cryptocurrencies. So let's dive right into it, Ross.
All right, sounds good. So last year, one of the things that was really exciting is the crypto markets went absolutely crazy. And the feedback that I kept getting from students, including Arsh, was that the strategies they've learned in the Warrior Pro Trading course, the strategies that we typically apply to stocks, works really well on cryptocurrency. And the strategy we trade is very simple. And so it made me start to think more and more about creating a module in our Warrior Pro course specifically for crypto trading. And so we've finally done it. Now, the sad thing is, as we're doing this video here, the crypto markets have dropped more than 50% in the last 6 weeks, which is obviously a really crazy drop. And I think this video is important for a couple of reasons. One, for traders who have been in the crypto market and actively trading a lot, you may be starting to feel frustrated because the tides have changed a little bit. And so this video is going to teach you how to find A-quality setups. And you may decide, once learning what A-quality setups look like, that it's okay to look for them in the stock market as well. You're not limited to cryptocurrency. And then number 2, I want you guys to understand the risk involved. Obviously, trading stocks is risky, trading cryptocurrencies is risky. And so we're going to break down some of the levels of risk that you really need to be aware of before you get into this. So a couple of the topics for today: what are cryptocurrency, and of course, what's Bitcoin? Bitcoin is the big one, but it is just one of many cryptocurrencies. Secondly, we're going to talk about the critical concepts that you need to know before trading. These will help you become more profitable sooner and help you avoid the common mistakes that many beginner traders make. We're also going to show you examples of some really good trades, and I'm going to walk you through some trading tools, including how to open an account with Coinbase, how to link it with GDAX, and how to take your first trades. All right, so let's get into it and start by talking about the $200 million pizzas. This is actually true. 2 pizzas sold for what would now be worth, or what would have been worth in December, $200 million. So Arsh, do you want to tell us a little bit about the...
Yeah, so that would be the story of Laszlo Hanyecz, who back in 2010 purchased 2 pizzas for 10,000 Bitcoin, back when the value of those coins was practically $0. It was very speculative in the early days. But in just about less than 8 years, the value has skyrocketed to over 200 million at the peak of the Bitcoin rise. Back when Bitcoin was about $20,000, these coins were valued at nearly $200 million. So I'm sure that Laszlo wishes he had kept those coins, right?
Yeah, I mean, I definitely think so. That's the crazy thing, though, because those were the first transactions with Bitcoin, and at the time, there was no telling what it would someday become. Something we'll talk about in a moment is the fact that every individual Bitcoin can be broken down into 1/100 millionth of a coin. So just like every dollar can be broken into 99 or 100 cents, equaling a full dollar, each Bitcoin can be broken up into 100 million tiny little pieces of Bitcoin that equal 1. And so at the time, 10,000 Bitcoin, I mean, you know, it was just worth basically nothing, but it had this future potential. So another thing that's worth noting is the fact that the Dow Jones Industrial Average took over 100 years to go from basically like $30 to 20,000. Over 100 years. And Bitcoin did it in less than a decade. So it really goes to show the widespread consumer adoption of Bitcoin that we've seen in the last 10 years. All right, so what is Bitcoin? Arsh, do you want to tell us a little bit about what it is on a high level?
Yeah, so let's dive right into it and talk more about what it really is from a fundamental standpoint. What it is it's a decentralized digital currency or cryptocurrency. It allows users to securely and instantly transfer a digital form of value to anywhere in the world without having to go through a middleman like a bank. Essentially, it's a digital form of money. So I would compare it to innovations in email and text messaging, which revolutionized the way in which we communicate with each other. So it was the first cryptocurrency created back in 2009 by an unidentified individual named Satoshi Nakamoto. He designed Bitcoin to have a maximum supply of 21 million coins, and they are unlocked through a process called mining. Currently, there's about 16 million Bitcoins in circulation, so that leaves another 5 million to be mined. Once the last Bitcoin is mined, it won't be possible to create any more of them. So what's unique about Bitcoin is that unlike the US dollar, which is backed by the Federal Reserve, a Bitcoin is only worth what the market is willing to pay for it. So currently that's about $8,100, which gives it a market capitalization of 137 billion.
Which is, I mean, obviously absolutely insane. One of the big appeals to Bitcoin initially was anonymity, that you can purchase things anonymously. And as it turns out, Bitcoin is not as anonymous as some of the other cryptocurrencies. So there are other cryptocurrencies now that are even more anonymous than Bitcoin. And so for people that are actually using cryptocurrencies to make anonymous purchases, which is some of the shady stuff, that is something that is going on. And one of the things that I think is worth noting is that the majority of people buying Bitcoin are buying it not to actually make purchases with it, but as a speculative investment or just simply as a trade to buy it and then sell it at a higher price.
Totally.
So what is Bitcoin mining? You want to tell us a little bit about the mining process?
Yeah, let's get more into that. So Bitcoin mining is the process through which miners use software to verify and add transactions to what's called the blockchain, which is the technology that Bitcoin operates on. And that's essentially a public ledger. So what this means is that every Bitcoin transaction that takes place is verified by all of the miners that are connected to the network. And they're all in agreement that the transactions are legitimate. So individual miners dedicate their computer resources to the Bitcoin network, and they're required to put together recent Bitcoin transactions into what are called blocks, hence blockchain. They also have to solve cryptographic hash puzzles to verify the transactions. And once the miner successfully completes the puzzle, their block is added to the blockchain and they can claim their rewards, which actually includes Bitcoin itself and the transaction fees that are associated with the block that they verified. So once actually all 21 million Bitcoin have been mined, miners are no longer going to receive Bitcoin as a reward, but they will still be eligible to receive the transaction fees that are associated with the block they mined, which is still going to give them incentive to continue operating the network.
Okay, so unlike like some credit card network that's centralized with their own servers and their own infrastructure, the cryptocurrency network is actually supported by individuals like you
Right.
and even me. I mean, I don't mind, but it could be just as easily. And our incentive to be a miner is that we get that transaction fee, and if we solve one of the puzzles, we can unlock a Bitcoin, which at $10,000 per coin, obviously there's a huge incentive there. So what that's created is a surge in Bitcoin mining operations to the extent that last year, 25 terawatts of energy were used on Bitcoin mining operations. That's more energy than Ireland used last year. It's more energy than 159 countries in the world used last year. So, it kind of just puts it in perspective. If you've seen some of these big factories where they have all of these servers just lined up, what they're doing is they're mining Bitcoin. They're processing the transactions, and they're incentivized to do it by the transaction fee and the release of additional coins. So just something that is kind of interesting. Realistically, if you right now or myself, if we bought a mining computer, most likely we wouldn't even be able to pay off the cost of the computer because of the cost of energy just to run that computer, and the fact that the puzzles are getting increasingly more difficult, which puts miners at a competition to see who can have the best, fastest computer to unlock the most Bitcoins and solve the most transactions and puzzles, the fastest. All right, guys, so let's look at a chart here of Bitcoin. This is as of today's date, and I can only wonder or speculate what it'll be at by the time some of you guys are watching this video, which may be months from now or even years from now. But this is the wild ride that we've seen for Bitcoin in the last year. This just squeeze from 900 up to 1,000, 2,000, 3,000. Even at 3,000, we were thinking, geez, this is really extended, and then up to 4,000, 5,000, a big pullback. And we thought, okay, that's it. That's probably going to pull back for a while. And boom, right back up to 6,000 to 8,000 and another sharp pullback. And again, oh, I'm sure that's it. It's going to fade. And then all the way up to 20,000. Just so much exuberance, so much excitement. And we see this in the stock market all the time. These kind of like, they're almost like feeding frenzies. Traders get so excited, they see opportunities, and stocks go kind of, this is parabolic. They go almost straight up. But if the fundamentals of the company and the stock market can't sustain those values or justify those values, they do come down. And in the crypto world, the value is based on what people perceive its value to be. And so clearly there's a little bit of profit taking, a little bit of consolidation, and it'll be very interesting to see if this just fades back down to, the 2,000, 3,000 level, or if it curls back up and it really holds these levels. At this point, it's kind of anyone's guess. We'll just find out. So what is a cryptocurrency? Arsh, do you want to walk us through this?
Yeah, sure. So Bitcoin was the first cryptocurrency to have been released, but now we see that there's over 1,000 cryptocurrencies in existence. Essentially, what it is it's a digital asset that is used as a medium of exchange, and it utilizes cryptography to secure transactions, control the creation of additional coins, and to verify that the funds were transferred. They operate on a secure and decentralized network where no single centralized party is responsible for the operation or the security of the network. Right. So that means that coins can't be counterfeited and transactions can't be manipulated. So most cryptocurrencies operate on the blockchain, which is the same technology that's utilized by Bitcoin, but we've seen a few other cryptocurrencies that have introduced their own technology, such as IOTA and Ripple.
Okay. One of the things that's also kind of interesting is that, for me, primarily trading stocks, in the last few months, we've seen a number of stocks that came out with these headlines that they were developing blockchain technology. And suddenly, we would see these stocks just take off. We saw one stock go from $6 to $155 a share in 4 days, which is absolutely crazy. It was one of the biggest moves I'd ever seen, and it was definitely because of what was happening in the crypto space. That headline just got traders excited, and I guess for traders like me that don't really trade or hadn't traded at that time, cryptocurrencies, it was like an opportunity to be kind of part of the excitement. So that's definitely something that is worth noting. So why trade cryptocurrencies? I would say the big opportunity here is that when we're looking at cryptocurrencies, we're seeing that the patterns that we trade on stocks work out in the same way. They resolve in the same way. And what's really crazy is that what I mentioned about the stock that went from $6 to $159, I mean, Bitcoin went from 1,000 to 20,000. And we're going to look at charts for Ethereum and Litecoin, and you're going to see these equally just parabolic moves. So the patterns that we typically trade in the stock market, you buy it, you maybe take $500 of risk, and you make $500, maybe $1,000. You take that same level of risk in cryptocurrencies, and in the last 6 months, you were getting a 4 times, 5 times, 6 times return. So you'd risk 500 and you make 5,000 or 4,000. And it's just because of this incredible excitement. Now, another benefit and definitely an appeal to cryptocurrencies is that you can trade 24 hours, including weekends, and there's no minimum trading balance required. So right now, that also it's a pro, but it's also a con. And the con of that is that there's not a lot of regulation. So in the stock market, obviously, there's a lot of regulation about when companies can do IPOs, what you can buy, what you can sell, what you can short. And with the cryptocurrency, it's a little bit of the Wild West right now, which has caused some of the big drops because when there comes out a headline of possible regulation by a country says, we're going to regulate so no one's allowed to mine cryptocurrencies anymore. All of a sudden, that can have a really drastic impact on the value. So that's a risk component that you have to be aware of. But right now, no minimum trading balance with no regulation is a plus if you only have a couple $100 that you want to throw into it. Is there anything else you wanted to add on that slide?
Yeah, I would just mention that to add on to what you said, that it's such a relatively new asset class that can still be considered to be in its infancy. So I would say that as the market continues to grow and develop, we'll likely see that major trading opportunities continue to develop as well. So they're so volatile day to day, and they could provide great opportunity to create an additional source of income. Uh, yeah, just it's
Yeah, absolutely. And
it's a great
especially
place to be involved as a
the
trader.
benefit of 24-hour trading. If you're still working a 9 to 5 or whatever, you can't trade the stock market. You could be applying those same strategies to cryptos and honing your skill, building up a little bit of confidence, and then transition to trading stocks once you retire from the 9 to 5. So institutional adoption is an interesting topic because initially a lot of Wall Street investors were super critical of cryptocurrencies. They're like, it's a bubble, it's all a joke, it's not real, we don't respect it at all. And then, they kind of were forced to start respecting it as the price got higher and higher and higher and more people were adopting it. And so we now are seeing Bitcoin futures. Do you want to talk a little bit about those?
Yeah. So it's really weird because usually the institutions are the first to the party and the retail investors are last. But that's totally flipped in this situation where the retail investors got in first on the cryptocurrencies, and it's the institutions that are late to the party and just now joining. So what we're seeing that in December of 2017, we saw that the CME Group and the CBOE Group both rolled out Bitcoin futures. We also heard that the Nasdaq plans to roll out Bitcoin futures in 2018. These are some of the most reputable financial exchanges in the world, and they're just now getting involved with Bitcoin. Um, Financial institutions were really unable to be involved with Bitcoin prior to Bitcoin futures because of the unregulated nature of the Bitcoin market. But with the futures markets, those are completely regulated. So that's opened the door for institutional inflows. And it also allows for the shorting of Bitcoin, which gives traders the ability to profit to the downside if they think Bitcoin's going to decline in the future.
Exactly. And that's been a challenge for retail traders right now because currently retail traders haven't had an ability to short Bitcoin. And so you could only really bet on it going one direction. And obviously that has probably propelled the move up because you don't have any, even if you wanted to take the opposite side, it just wasn't, it wasn't an option. So that's definitely worth noting. And with financial institutions, they have to trade in regulated financial instruments when they're trading the money of a company's 401k or a pension fund or something like that. They can't just be dabbling in an unregulated market like cryptocurrency. It's just they couldn't do it. But now with the futures, they're able to. So this slide here shows a number of different cryptocurrencies, and one of the things that you'll notice is that they're all very cool little, totally millennial, like little apps and icon type of shapes. There are more cryptocurrencies than you could remember. It's one of those things now where we've seen a lot of ICOs, so an initial coin offering, and you have to be really careful on that because with the lack of regulation, I've even had people email Warrior Trading and say, hey, we're putting out this ICO. We'd love to have your support on it. And it's like, no way. It's just so shady. It's so sketchy. It seems like anyone can do an ICO. You could do an ICO, anyone that wants to. And it's not like that with IPOing for, a stock. So there's a lot more risk there. And if you go onto message boards or things like that, you'll see a lot of the promotion of different altcoins. And you have to realize that if you're trading an altcoin, remember it can go down to the 1/100 millionth of a Bitcoin. So if you own it at basically zero, and it does go up to 0.00000001, you're still at a really big profit. And so you'll see a lot of these trading at far less than a penny, and these slight little moves for the people that are in it really early could be a big profit. So you have to be mindful that the pump and dump stuff that we've seen with penny stocks has happened to a certain extent in the crypto space as well. All right, so let's talk a little bit about Ethereum. You want to tell us about Ethereum?
Yeah, so Ethereum is one of the major cryptocurrencies that's practically exploded in value in 2017. A single Ether coin is currently trading for about $800, which with a circulating supply of 96 million coins, that gives it a market value of 78 billion. So that represents a gain of
$78 billion. That's crazy.
yeah, that represents a gain of nearly 10,000% since its low in the beginning of 2017, which was around $8. And to kind of put that in perspective for you guys, every $100 invested at the beginning of 2017 would now be worth $10,000.
Wow. So that would have been a
So
good $10,000 investment.
yeah, definitely. And I would think one of the reasons why Ethereum's been one of the leading cryptocurrencies is because it provides people the ability to make their own cryptocurrencies. So to add on to the to your point in the previous slide, that's a reason why we've seen so many more cryptocurrencies is because platforms like Ethereum have made it so easy for anybody to come up with their own cryptocurrency. So to get more into the fundamentals of Ethereum, it is actually a decentralized blockchain-based platform that allows developers to build their own decentralized applications. So users can build their own cryptocurrencies using the platform, and that's paved a way for an explosion in the number of total cryptocurrencies out there. They use a technology called a smart contract, which helps to verify and enforce contracts without the need for a centralized third party. Right now, the contracts are still in their early stages of development, but there's numerous applications for them, such as within the financial system, medical records, and even voting. You can kind of think Ethereum to be the racetrack, while all the cryptocurrencies that are built on the platform would be the race cars. So one of the reasons why Ethereum's gained so much in value is because the market realizes that it's better to bet on the platform that deploys all of the cryptocurrencies rather than betting on the individual cryptocurrencies themselves.
That makes a lot of sense. Yeah. So let's look at the chart for Ethereum. You can see here this move from less than $100 all the way up here through the very high of over $1,400. And this is 1,400 US dollars. You can view cryptocurrencies against the euro. Well, obviously, we choose the US dollar being located in the States here, but you can view it in other currencies. But here now we've had this pullback, about a 50% drop, down below 700. It was holding up better than Bitcoin here until the last week and a half, and then it's dropped down a little bit more. So we'll definitely be keeping a close eye on it, but this is one of the ones that we've been trading quite a bit. So Bitcoin, Ethereum, and Litecoin are three cryptocurrencies that you can trade with Coinbase. Now, some of the other cryptocurrencies or the altcoins you can't trade on Coinbase, and so if you wanted to trade them, you'd have to open additional accounts with these other brokers. A lot of those brokers are not even accepting new accounts right now because they've just been bombarded by applications, and their servers are overwhelmed, and they're like, no, we're not accepting new accounts. So we use, or at least I use, and I know you use Coinbase, and that restricts us to only trading really the most popular cryptocurrencies. All right, so let's talk a little bit about Litecoin.
Yeah, so this is one of the other market favorites, and it's seen an incredible rise in price and popularity these last few months. The price is right now sitting at $146 a coin, and that gives it a market cap of about $8 billion. However, we did see that it peaked over $400 just a few weeks ago. So Litecoin can be thought of as a competitor to Bitcoin because it's attempting to solve all of its major flaws. For example, one of the major upgrades of Litecoin is that it can transact much faster than Bitcoin. So while it takes Bitcoin roughly 10 minutes to generate a block, it takes only 2.5 minutes on the Litecoin network. It can also handle a much higher volume of transactions than Bitcoin, which is a result of the faster transaction times.
Right. That makes sense. Yeah. So if we look at the Litecoin chart here, you can see this just crazy move as well, from down here under $60 all the way up to 380. But again, like Bitcoin and Ethereum, and similarly to Bitcoin, a pretty steady pullback here, a big retracement. But what you can see here, and we'll talk about this a little bit more when we're breaking down the patterns, is that this right here is one of the patterns that we buy. When we see a stock start to break out, we wait for 3 red candles, either 2 or 3. In this case, we got 3. And then the first candle that breaks the high of the previous candle is our entry. And so there's a little bit more to the pattern than that, but just to simplify it. And so you can see here, your entry would have been right under $100. And I mean, it just went basically straight to 380. So that's what I'm talking about, where and that's a crazy return. And it's not like we get in these at 95 with our stop at 0. Our max loss is to the low of the pullback. So $500 of risk, when we say we're risking 500, is the amount we would lose if we sold it right here. So that's 500 of risk. 1,000 of profit is like right here. So that's 2,000. That's 3,000, 4, 5, 6, 7, 8, 9, 10,000 with only $500 of risk. And so you can imagine traders who took $5,000 of risk or even $10,000 of risk, they were just destroying the market. I mean, they were just killing it. And that's why they were emailing me like, Ross, you should be trading cryptocurrency. You made $117,000 in January trading stocks. You would have made $1 million if you were trading cryptocurrency. That's what people were telling me.
Yeah, like I would say Litecoin's pretty unique because it seemed to have had a crazy breakout. Most of the other cryptocurrencies took some time to travel, but this thing literally in just 3 or 4 days just went absolutely parabolic. So it was really insane to watch that.
Yeah, and so a big move like this, it's bound to retrace a little bit. All right, so now let's talk a little bit about Ripple. All right, so tell us about Ripple.
Yeah, it's had one of the most incredible moves out of the other cryptocurrencies in December of 2017 when it was as low as 30 cents and it went to all the way to 330 in just under a month. It may seem like it's a cheap cryptocurrency, but it actually has a really large supply and it was valued at about $127 billion at the highs of 330. So that's roughly what Bitcoin is valued at today. It's since retraced actually much of those gains and it's back down to about 75 cents, but that's not alarming considering how steep and quick that rally was. It was due to come back down to earth, right?
Yeah, makes sense.
So from the fundamental standpoint, what Ripple is it's a payment network and a cryptocurrency that was created in 2012 to connect large financial institutions such as banks. So it allows for the transfer of money through what's called the Ripple Net and the payment network, or which is the payment network, and XRP is the cryptocurrency that's used within the payment network. Transactions settle in 4 seconds, whereas Bitcoin it can take over an hour for the transactions to settle. And a Ripple can also handle up to 1,500 transactions per second, whereas Bitcoin only does about 7. So it's a major upgrade in infrastructure over Bitcoin. And it has a very unique application in this financial institution setting.
Got it. Very cool. So you can see here the Ripple chart. This just, again, very explosive move here from 20 cents all the way up here to 330 and then now back down. So, this type of price action, we've seen this in stocks a lot. Stocks that go from 30 cents, 40 cents to $3. They come back down and a lot of times they never make their way back up. So it'll be really interesting to see if cryptocurrencies are able to hold their value. If consumers are willing to at some point step in and buy them and in that way provide a backstop of support. This is the lowest it'll go because I'm just going to start buying it. I mean, even today, people are buying Bitcoin at $8,000 or whatever it is today, right around there. And so that is current support, but how low will it go is kind of anyone's guess. So let's talk about the trading concepts that you should master before you start trading with real money. Now, I really encourage all of our students to trade in a simulator before going into real money because you're going to find that as a beginner trader, you're going to make beginner mistakes, and that's okay. You want to make those mistakes with pretend money, not real money. But in order to be successful, you need to master these 4 concepts. Number 1 is risk management. Number 2 is fundamental analysis. Number 3 is technical analysis. And number 4 is trade execution. And we're going to be breaking down all of these concepts in detail in the full length crypto course. This, of course, is class 1, which is sort of an intro, a surface, view of these concepts.
What's
So the
really
first
cool about
one
those
is risk management. Yeah, go ahead, Arsh.
What's really cool about those concepts is that they're universal market concepts, so they can be applied to practically any market: stocks, cryptocurrencies, forex, commodities. So mastering those four concepts are critical in ensuring your success as a trader.
Yeah, that's a very good point. And so a lot of traders got into the market in the last 6, 8 months because they kind of got on the cryptocurrency bandwagon. Now cryptocurrencies are slowing down and they're kind of like, okay, what do I do? What do I do next? And I noticed the same thing a couple of years ago when a lot of traders got into the market buying pot stocks, buying the marijuana stocks because they were going crazy with potential legalization and all that stuff. But then that market slowed down and those traders were like, okay, I made $50,000 in the last 4 months. I quit my job, but it's not, that I'm not able to still trade those markets. So how do I keep making the money? And that's kind of how they got into trading stocks at Warrior Trading or whatever else. So right now, when we teach you these four concepts, I want you to realize that you can apply these to cryptos, or you can use this as a foundation to apply to Forex, futures, or stocks. It doesn't matter. This is a universal set of core concepts for profitability. And so the first one is risk management. And of course, you have to realize with cryptocurrencies, probably more than other financial instruments, there is a risk of losing not just a lot of your money, but potentially all of it. I mean, right now, cryptocurrencies are so unregulated. When you guys are watching this video, 6 months from now, a year from now, there may be more regulations that protect your investment. But right now, there is the risk that what you put in, potentially something could happen and it's gone. And so you have to be mindful of that. I personally, even though I have a lot of money in my regular trading account, I would never put $250,000 into cryptocurrency. It's just not for me, my risk tolerance, because I can't feel comfortable losing that amount of money. So be mindful of that, and also recognize that cryptocurrencies are very volatile and they can have large spreads. And what that means is that as soon as you buy the stock, you're buying from someone who's willing to sell it to you, right? And so the distance between the price of a buyer and the price of a seller is the spread. So if you buy, let's say, Ethereum at $700 or $703, you're buying it from someone selling it at 703. But let's say the nearest person willing to buy it is only at 702, that's a $1 spread. And so now suddenly, if you turn around and want to sell it a minute later, you just lost $1 per share. That's with 1,000. I mean, that adds up to a lot. I mean, that could be $1,000 or more depending on your position size. So you have to be a little bit careful there before you take the trade, that you're looking at the spreads. And obviously the coins on Coinbase, Litecoin, Ethereum, Bitcoin, they're going to have tighter spreads, and so the risk is going to be a little lower there. Is there anything you wanted to add on risk management?
We have another slide on it next, and we'll talk more about it. So I'll add a little bit more on this slide. So trading could be a really risky activity if you execute it improperly. So I would say that the single most important concept for achieving consistent profitability would be risk management. You can't get involved in any trade without first understanding what your risk is or what you stand to lose if you're wrong. Trading's a matter of probability, so you're not always going to be right on your trade idea, and you have to make sure that you're keeping your risk at an absolute minimum when you're wrong, in order to prevent the possibility of taking too big of a loss. As a trader, your number one priority is to keep your losses small and let your winners realize their full potential. And that could be a challenging concept to master, but it's really critical to ensuring your success as a trader. So we recommend that you don't risk more than 1% of your account in any single trade. So what that means is that if you have a $10,000 account, you shouldn't be willing to lose more than $100 on any single trade idea. On the other hand, if you should also be aiming for a minimum risk reward ratio of 1 to 2 on every trade, which means that you want to make at least 2 times what you risked. If you're willing to risk $100 on the trade, you should have the ability to make at least $200. If that potential doesn't exist, then it's a trade that's not even worth taking.
Right, totally. And so this is the slide on our profit loss ratio. So when you risk 100 to make 100, you only need to be right 50% of the time to break even, which is awesome because you've set the bar low. If you're right only half the time, you break even. But what's really cool is that if you risk $100 to make 200, which is a 2-to-1 profit loss ratio, the bar is even lower. You only need to be right 33% of the time to break even. And so then if you're right half the time, you're actually really profitable. If you're right 60% of the time, you're doing extremely well. And the thing is, a lot of beginner traders, they don't even know about profit loss ratios. They don't understand risk management. And so they inadvertently end up taking trades where they risk 3, 4, 5% of their account, or they risk $500 to make only 100. And I'm at a point now where I have a level of confidence where I will risk more of my account than the 1% rule. I'll take more risk, but that's because I have the confidence and the years of historical data to back up that when I'm confident, it's worth taking more risk because of the reward potential. But as a beginner trader, you have to assume that your accuracy is not going to be at the same level as someone who's been doing this for 5 years or 10 years. It's just, it's not. So accept that, recognize that accuracy improves with experience, and do everything you can to keep your losses as small as possible so you can survive the learning curve to get through to the other side where you can start taking more risk, gaining more confidence, building more profits, and growing your account. So fundamental analysis is one of the other core concepts that traders really need to understand. And fundamental analysis is different with cryptocurrencies than it is for trading stocks. So with stocks, when we think about fundamentals, we think about things like the company's earning reports, their quarterly earnings, their annual earnings. We think about press releases that they've made, the industry that they're in, all of these types of things. And global interest rates can affect their earnings and their debt ratios. These are fundamentals. And so we look at that really more as an investor than as a trader. As a trader, we focus on trading just the price. And so we don't have to put a lot of emphasis into doing fundamental analysis, because when you're doing a trade that's as short as 10 minutes or 15, 20 minutes, or even a couple hours, long-term fundamentals aren't going to impact your trade. What impacts your trade is just that short-term volatility. So when it comes to fundamentals on cryptos, you do have to be mindful of the fact that we have a little bit of risk with lack of regulation. There's certainly, headlines that come out about blockchain and ICOs and things like that. And you can read them, you can analyze them, and they may help you make some decisions, but most likely you're not going to have to spend a lot of time pouring through fundamental analysis when it comes to trading cryptocurrency, which for I think both of us is just as well, because we're active traders and we don't like to have to pour through all of that financial data and all that stuff.
Definitely.
All right, so the next component is technical analysis, and this is really at the heart of what we do as traders. We're analyzing the price, and so what we want to do is we essentially want to make predictions about what the price is going to do an hour from now, 2 hours from now, or a week from now. That's a short-term type of technical analysis. So what we use are candlestick charts, which you can see right here, and we use a small handful of technical indicators, including moving averages and volume bars. So the way we use these is we look for indicators, and these are indicators that at this point are pretty much universally known to be indicators of potential breakouts. And so when we see an indicator of a potential breakout, we often buy either just before the breakout begins or just after. Now, my preference, and I mentioned this in one of our other classes, is that I kind of think of these breakouts as trains leaving the station. And let's just say I came into the train station and I need to leave immediately. I got to go. And I don't even care where I'm going. I just want to get on a train and get out of here. I'm not going to just jump on a train and sit there and wait for 12 hours and find out that train's not leaving till tomorrow morning. I'm going to look for the train that's starting to move and go and jump on it and then just ride it out of town. And that's what we do with these stocks. Generally, we wait for them to start to move. So this right here is the beginning of a breakout. These three candles are indicating the stock is starting to break out. And we would typically buy the first little pullback, we call it a micro pullback, after a fresh breakout. So this would be an entry point, and this is all very technical, and we go over it in a lot more detail later in this class. But just so you guys know, this is what we're looking for, this type of thing. We let stocks start to break out, we buy the pullback, and then ride it for the next leg up. And that's much easier also than trying to predict, is this stock going to break out here? Or is it going to break out here? Or is it going to break out here? Because meanwhile, you're just going to be sitting there waiting and holding the whole time. And while you're doing that, your capital is tied up and you have exposure risk. You have the risk that, God forbid, some bad headline does come out, with regulation or whatever else, negatively impacting the value of this currency, and boom, it drops, and now you're out of luck. Is there anything you wanted to add on technical analysis?
Yeah, I would just say that similarly to you, technical analysis is my bread and butter trading methodology, and it's what I like to use to find all of my trading ideas. So it really allows you to predict future direction of prices simply by studying what's happened in the past. And although it's more of an art than a science, there are some fundamentals of technical analysis that people should know about, and we'll definitely get more into those in our technical analysis lesson. It's just a great methodology to try to help you find these major price patterns that usually lead into such enormous moves.
Yeah, and you can apply these easily to Apple, Facebook, Tesla, Amazon. You can apply them to small, low-price companies between $3 and $10. These are universal patterns. Once you learn them, if you're right now learning them for cryptocurrencies, because that's what you're interested in, that's fine. You can apply them to cryptos, but know that as you grow your account, as you start to build profit and you want to start making better investments with your IRA or your 401k, you can apply those same strategies, those same technical analysis concepts to the overall market or to futures or Forex or whatever you'd prefer. So this right here is the technical breakout. So this is the stock that we were just looking at before. This was this period of consolidation, and we didn't know when it was going to break out, but boom, it started to break out right here. It pulled back, and we bought the micro pullback. And from that point right there, that was an entry right around 774, right around there. And this was the result. It actually never looked back. So one of the strategies that we use for position management is called sell half and hold the rest with a stop at break even. And break even is the price that you got in at. So we would often sell half into a move like this because this is fantastic, and then hold the rest as long as possible. So through here, you could have continued to hold it and hold it and hold it and sell small portions. You could, once you have that half remaining, you could sell an eighth of it and another eighth of it and just slowly sell it off until eventually, maybe down on this dip, you finally sell the rest. And this could have been, for a beginner trader, a huge home run trade. You don't see moves like this in the overall market very often, but in the crypto space, we were seeing them left and right.
What's really cool about that pattern is you were literally never red on the trade. So you're just letting your profits, you're literally letting your profits just run. So it's not tough to expect to be able to hold something like that. It's because you're not going to lose money on the trade. It just becomes a question of how much money are you going to make.
Right. Yeah, that's exactly right. And that was Ethereum. This one here, this is another chart. Let's see. Was it? No, sorry. This was the same. Wait, which one was this? This is Bitcoin Cash. So this is a while back.
So previous one was Ethereum, and this is Bitcoin Cash.
Okay. Yeah, so you can see here again, consolidation, the breakout, curling up, the pullback, popping up, another pullback. So there are multiple patterns in here. There's one right here. There's another one right here, a small one right there, and a crazy move, of 100%, well, 340% from the bottom of the pullback. But, from right here, from 1,000 up to 2,000, you don't see 100% breakouts. I mean, imagine if you saw that trading in your 401k or your IRA every other day. It would be, it would be absolutely insane. But we were seeing it in the crypto space day after day after day.
Yeah, it definitely feels like a mania at times, but when the opportunity is there, you really have to take advantage of it before it disappears.
Right. And so even if it turns out that the crypto space, this whole move was totally a bubble, it doesn't mean that you couldn't have been very profitable in it. The people that lose during bubbles are people that either hold thinking they'll continue to just forever go up. So they're more of just taking a speculative position and just holding. And of course, people who buy at the top. But smart traders, smart investors can profit from bubbles because there's so much volatility. And so again, the lessons that you learn here with what happened during this crypto bubble, you can apply when we see another bubble. And we've seen many in the stock market. A couple years ago when we had the Ebola crisis, any company that made anything even close to an Ebola vaccine was going up like 300-400%, because there was the possibility if this thing goes widespread, this company is going to be, it's just so valuable. The company that made blue biohazard suits, they went up like 600%. I mean, it was crazy. And then back in, I can't remember, 2014, during the shooting in Ferguson, the maker of those body cameras that police officers wear, that company went from like $3 to $35-40 a share in like a week and a half, because there was this speculation that maybe Congress would make it law that all police officers have to wear body cameras. And so we see these types of bubbles, and whether they're in the stock market, an entire market, or just a subsector of the market, they are opportunities. And so technical traders can capitalize on them and really make a lot of money if you're smart about your entries and you know how to sort of trim and trail that position. Take a little out, sell a little more, so on. Now, the next core concept is trade execution. So executing trades, you have to first perform your risk analysis, and you have to perform at least your due diligence on fundamental analysis and on technical analysis. So once you have broken down the pattern and you're like, okay, this candle is about to make a new high. I know if it breaks over 774, I'm a buyer. Now it's time to be ready to press the buy button and to know how to execute your trades. So this is something that we're going to get into a bit more detail on a little bit later in the class, because it's kind of the nitty-gritty stuff of exactly how we read the level 2. But in a second, we're going to log into Coinbase, and I'm also going to kind of walk you guys through Coinbase and GDAX and how to execute trades. I would say, though, a big thing here is to remember to be focused on discipline. Discipline is so important, and it's so easy as a trader, if you get frustrated, just to keep pressing the buy button, to buy more and more and more. And there's that little bit of a disconnect where when you're taking risk, it's not like you're putting real money on the table. It's real money, but you may not see it. And so that disconnect can allow traders to do things that they wouldn't maybe ordinarily do. And so there's a process of emotional conditioning and building up your tolerance to take risk, because this is risk taking, but we do it in a calculated way. And by really measuring our risk, we reduce how much we're willing to lose, which is really important. Is there anything you wanted to add on this slide?
Yeah, I would just say that trade execution is definitely one of the tougher aspects of trading to master, just because there's just so much psychology involved with trading, and you really have to learn to separate that when it comes down to trading as a business. If you're trying to be a consistently profitable trader, you really have to leave the emotion behind you, and you have to be disciplined about every single trade that you take. You can't just take it out of if you lost money on a previous trade and all of a sudden you're revenge trading. That's a big thing that totally bites traders in the butt, is revenge trading, because they just lost more money than they expected to in the previous trade, and that leads to frustrations that eventually lead you to take another trade that it snowballs out of control, and now you're so far in the hole that you just don't even know what to do.
Yeah, and so the trick is really to learn those emotional triggers and cut them off at the pass before you even go down that cycle. So if you start to have, establishing your max loss on the day, for instance, saying if I'm ever down more than $200 on the day, I'm turning off my account and I'm walking away. Okay, that's a good rule. Now, do you have the discipline to actually follow it? And that's another story. And so we'll talk more also about building up discipline. So let's talk for a moment about the different trading exchanges, because this is kind of interesting. Um, Bitcoin, well, a lot of these cryptocurrencies trade on multiple exchanges and actually trade at slightly different prices depending on which exchange they're on. So the current price of Bitcoin right now, well, it depends which exchange you're looking at. So do you want to talk a little bit about the exchanges and which ones we've been using?
Yeah, so currently we like to use GDAX, which is owned and operated by Coinbase. Coinbase is one of the biggest, it's a leader in the cryptocurrency trading exchange space, and they allow you to trade Bitcoin, Ethereum, Litecoin, as well as Bitcoin Cash. So currently they only allow you to trade those four, but those are some of the largest market cap cryptocurrencies. So you have more than enough access to the cryptocurrency market simply through GDAX. But if in case you do want to expand your horizon on the types of cryptocurrencies you want to trade, if you want to trade some of the altcoins, say Neo, or there's one called Strat, you could use an exchange like Bitfinex or Bitrex and also Bitstamp. All of these exchanges provide you access to trading a much larger selection of cryptocurrencies than GDAX. But personally, we prefer to just use GDAX because we like to trade the major four cryptocurrencies since they're not they provide great trading opportunities, but the altcoins can just be so incredibly volatile sometimes that it just doesn't even make it worth trading. And another thing about the altcoins is that most of them trade against Bitcoin. So what that requires you to do is you have to first buy Bitcoin before you can buy these altcoins. And so that means if Bitcoin's losing value while you're holding this Bitcoin and trading altcoins with it, you're going to lose money when you're converting your Bitcoin back into US dollars. So because of that risk, it's usually a lot easier to just use a website like GDAX and just trade directly into the four major cryptocurrencies using US dollars.
So the cryptocurrencies that we trade at GDAX, we're buying them with the US dollar, whereas some of the altcoins, you cannot buy them with US dollars. The only way to buy them is with Bitcoin. But obviously, while you're holding Bitcoin, because it's so incredibly volatile, if you bought that altcoin with Bitcoin and you bought the Bitcoin at 20,000, well, now you're down 50% on the Bitcoin. So even if you made a profit with the altcoin, now when you go and convert it back to Bitcoin and then convert Bitcoin back to a dollar, you've lost money. So the fact that it's so far removed and you're actually having to take two investments at the same time, to me, makes it unnecessarily complicated. However, during the bubble, it made it, in some ways, exponentially more profitable because both were going up at the same time. So, it's one of those things that helped amplify profits for traders, in the second half of 2017. But right now, it's not something that we're super interested in, at least not me. And I don't think you either. So let's talk a little bit about some of the different trading tools. Now, I want to walk you guys through getting set up with Coinbase because this is the account that I've been using. And I really like Coinbase because it's super easy to use. Now, full disclosure, I'm not getting any affiliate links if you guys join or whatever. I don't care. You guys want to use a different website, use a different website. It's totally your call. This is just what I happen to use. So you go to coinbase.com, you can sign up very easily. You go through the application process and you give them your name and all that stuff. It's very simple. And then when you sign in, I'll sign in right here. It has a two-step authentication. So you go into your iPhone, into the Authenticator app, and I'm going to enter here this code. All right, so let's see. Here's the new code. All right, so I enter that, and boom, I get logged into my Coinbase account. And I mean, just like that, you can get in. It's very quick, but it's also super secure. And you can see this is a very intuitive layout. So when we're in here, you can see the portfolio, and you can also go to buy, sell. So let's say right now, if I want to buy Bitcoin, I can literally go in here right now and buy Bitcoin. I can buy it through my bank account, which I've linked. But what I may want to do, for instance, I can go into my accounts, US dollar wallet, and I can actually send money into this account right here, and it'll sit there as cash. It doesn't have to be sitting invested in Bitcoin, Ethereum, or Bitcoin Cash or Litecoin. It can just be sitting here in US dollars, waiting for me to see a good opportunity, which is nice because obviously the US dollar is much more stable than Bitcoin. So as you can see here, transferred money into Coinbase, and then I transferred it into GDAX. So once you're all set up with Coinbase, you can go to gdax.com, and I'll just refresh this. I think it's gonna know here in a second that I'm already logged into Coinbase because they're owned by each other. And so now you can see basically, a pretty standard trading platform. What we have here on the left is what we would call our level 2. It's the equivalent of level 2. It's in a ladder form, but what this shows us right here at 798 is that this is a seller. This is someone selling 37 coins, but it's again 37.14471, and now it's it goes all the way down to the 100 millionth of a coin. We've got a 1 cent spread. For a second there it was 75 cents, but right now it's a tight spread. You've got 97 coins down here somewhere, 97, 99, 34. So this is the current price. And if we wanted to get in, we of course buy here. We can see the trade history. We can see all the orders going through. Right here we can see our charts. We can set them up the way we like with a 5-minute time period. And this, for the most part, is very intuitive. So we can go up here and switch from Ethereum down to, we can go, whatever, to Bitcoin. We can go against the US dollar, the euro. We'll use the US dollar. So here we have Bitcoin. All right, so this is just super easy, super intuitive. You can go in here, you can take your trades, you can buy through market order, limit order. For the most part, this is extremely similar to how we would trade stocks. The big difference is that the decimal point goes all the way down here, which is a little unusual, and that you can trade this 24 hours a day, which is really pretty awesome. But we're going to show you in a second the volume on these cryptocurrencies, because they really are insane. I mean, these are actively traded like this. Now, through the day, they have lulls and kind of peaks of volume. They do correspond a little bit with the market open of the US market. So from 9:30 to 10:30, 11, we see a little bit of an increase in volume as the US market opens. We see similar increases as other markets open, because a lot of traders, whether you're trading the US market, the Asian market, the European market, we trade most actively in the first hour. So within the first hour of a big market open, we see a little bit of an increase in cryptocurrency. So one of the other tools I want to show you guys is CryptoWatch. Now, this is pretty cool because this is a great charting platform. Now, some traders will use this, especially if they're trading on a different exchange. Like obviously over here, this is just GDAX. So these are the only coins that we can trade. But you could go on to CryptoWatch and you've got, as you can see, other coins that you can look at. So a lot of traders like to use CryptoWatch. It's a fast website, works pretty well. And you can see pretty much the same order ladder in a similar type of way. You've got the order ladder right here, or you've got your quotes ladder, which is our level 2, and then down here you have the time and sales. Now, if I go back to here, another thing you'll notice is that you'll see the cryptocurrency on each of the exchanges. So here, this is the price of Bitcoin on the GDAX exchange. The price is a little higher on this exchange. It's a little lower on these exchanges. So again, that's the kind of fluctuation between the different exchanges. So now let's look for a second at CoinMarketCap. So the cool thing here is that with this site, you can click on change in the last 24 hours, and you can look at which cryptocurrency has moved the most in the last 24 hours to try to give you an idea of where we're having volatility, where we're having opportunities. Because obviously, we want to be trading currencies or stocks that are moving quickly. So these show us the ones that are moving the most. You can also sort by market cap. If we click here on Bitcoin, we can look at this a little bit more closely. You can see the volume in the last 24 hours. I mean, this is insane volume. It's really just, I mean, it's really, I can't even, it's just crazy. These are just so actively traded every single day, 24 hours a day. So the opportunities, we're just going to see them again and again and again. So that's Bitcoin. And you can, of course, look at any one of these. So we have Ethereum over here. We go to markets, and you can check to see under markets which exchange has the most volume. So GDAX US dollar, Ethereum US dollar is the 5th for leading volume on Ethereum. And the leading ones are just a little bit higher up here, as you can see. So this may give you an indicator of, I want to trade this coin, and this is the exchange. But again, unless you're planning on opening accounts with every single one of these exchanges and then, transferring your currency across them, most traders just open 1 or 2 accounts, maybe 3, and just actively trade on that exchange. Even if the price is a little higher on a different exchange, we don't, usually trade across them that much. You kind of figure out what's a good fit for you, and then you stick with that. And then Coinigy here, this is another website that I'll show you real quick. Let's see, let me pull this up. So this is another trading platform. So, this is something that as active traders, we really want really robust trading platforms. We don't really want to just be trying to trade on our iPhone, even though you certainly can. If you want to be a successful trader, you want to have the best tools, and it's worth spending a little bit of money to have a good trading platform. So this is another one you could check out. Was there anything you wanted to add on this trading tools slide?
No, we're good on that one.
Okay, cool. And then we have a couple more trading tools. So, I already talked about CoinMarketCap. You want to talk a little bit about CoinDesk?
Yeah, so CoinDesk is this great website that you could use to find headline news on cryptocurrencies. So I would kind of compare it to maybe a Bloomberg for cryptocurrencies, where you can find up-to-date breaking news on cryptos. For example, back when China released that they were going to ban ICOs, that was the front page piece on that website. So it really helps you to figure out what's going on in the space which will kind of help you understand the market sentiment. If there's a piece of really bearish news, something that's really negative, that might give you the sign to maybe stay away from the markets for the time being. And then it could also actually give you insight into good trading opportunities. When a really bad piece of news comes out that's supposed to be really, really bad for the markets, and it's supposed to drive prices lower, but prices are not going lower, that's probably a sign that prices are about to go higher. So clues like that can hint you into trading opportunities.
Right, makes sense. So really I wanted to walk you guys through getting set up with Coinbase, learning how to use CryptoWatch, and learning how to use GDAX, because these are the tools that you'll use on pretty much a daily basis if you're actively trading. And Coinbase is super easy. GDAX is super easy. They're great tools. The question really is, do you know how to capitalize on the opportunities? When you see a good pullback, when you see that flag pattern, that technical setup, will you be able to profit from it? So in the upcoming classes for our Warrior Pro students, we're going to go into depth talking about risk management, fundamental analysis, technical analysis, and trade execution. Today we kind of got the tip of the iceberg of these concepts, and we're going to dive into more detail in the upcoming classes. All right, so I hope you guys all really enjoyed this first class, and love to have your feedback and hear your thoughts and opinions on it. All right, so we will see you guys all coming up soon in class 2. All right, we'll see you guys there. Bye, everybody.